Welcome, ladies and gentlemen, Commodity TV out of our studios here in Munich. And it's my honor and pleasure today to have an interview with Cliff Hale-Sanders. He's the Executive Vice President of Ascendant Resources, a successful zinc-lead silver producer out of Honduras. And we want to know what's the company about. Cliff, welcome and good morning.
Welcome. Thank you for inviting me on your show today. I'm very happy to be here today and explain to you what Ascendant Resources is all about.
Absolutely. Let's dive into the company. Maybe give us a short overview. Where are you based? What are you doing?
Sure, great. Ascendant Resources acquired the El Mochito mine in Honduras in late 2016. We're in central Honduras. We are producing lead, zinc, and silver concentrates. And the mine has been producing for 70 years. So we have a great track record and history. We need to refurbish the mine and put it back into tip-top shape, which is our focus for 2017.
What have you achieved so far? I mean, now it's October, yeah? You started already, I think, like in January, really to refurbish the stuff. So how was the, let's say, production history monthly-wise?
When we took over the mine in the beginning of 2017, things were not in great shape. So we recognized that. We started off about 1,250 tons per day. We're now up to just under around 2,000 tons per day. So we're up about 60% year to date. We think we continue to do better in Q4. We're targeting an average in Q4 of 2017 of 2,200 tons per day.
Fantastic. How have you achieved it? I mean, that's a real good swing, I would say.
Well, when we were looking at the mine, we saw an opportunity of a mine where there had been a lack of investment in the recent past. And the key driver here was reinvesting in the underground mining fleet, trucks, scoops, and some other pieces of equipment. So as we've been able to add new equipment to the mine, we've been able to move more rock and more, obviously, increase our production as a result.
Fantastic. Financially wise, how did you do that? Have you, I mean, you cannot walk to the bank and say, hey, hello, here I am, let's get some credit.
Well, as part of the transaction, when we acquired the mine, we raised roughly $40 million in Canadian in two tranches.
So equity.
Fresh new equity into essentially what was a new company with no real history. So we've acquired a mine with a long history into a new company where we're still now just expanding and introducing the story to everybody.
Great. Do you have any debt associated?
There's no debt, and right now I think we're fully funded to complete this transition into a good profitable mine in the zinc space, one of the few opportunities you'll see.
Fantastic. So considering, let's say, everything goes the way you want, you are planning, you don't need any extra money so far, right?
Not for this opportunity. We believe we're fully funded to make this transition. As we've said before, we expect to be free cash flow positive in Q4 of 2017.
Fantastic.
Not a lot, no, not making tons of money. We're still investing heavily, but we shouldn't be needing anyone else's money.
Yeah, but you know, this sounds terrific to me because it takes a lot of risk out of you and a lot of pressure on the company, of course. And as we all know, the zinc price is on 10, 11 year high. Lead is extremely high. Also, I think it's a 10-year high, something like that. And silver hopefully will start to move. So this helps you a lot. The mine is 70 years old, you said. So one might think, oh, is there anything left? So can you comment a bit, let's say, resources, reserves, mine life?
Well, when we acquired the mine, we actually have 12 years of resources in all categories. We do want to upgrade some of the confidence levels of those categories, and we're doing a 33,000 meter drill program in 2017 to do that. We also believe there's lots of opportunity to increase the grade of the mine, and as our drill results have shown, there's lots of high-grade material that has not been mined in the past. Obviously, in the last 5 years, very little exploration was done because metal prices were low. We're taking this opportunity of good zinc prices to really position the mine for the long term, not just the short term.
And I think you had also some fantastic drill results this week. Maybe you can comment a bit on that.
Yeah, we've so far released 2 rounds of drill results. First one was in June of 2017. It really highlighted, again, we've hit new areas of resources that weren't in our resource profile before. Of higher grade than we're currently mining, materially higher grade, so north of 10% zinc equivalent. And where the resource was supposed to be, again, reconfirming our view of increasing the confidence level, it's right where it was. Recently, we did release some really good drill results. One particular hole was 45% zinc equivalent over 5 meters. So again, there's lots of high-grade material left in the mine. We do have to go out and find it, but we're very confident in doing that. It's going to take some time, but...
Yeah, and also it confirms that you are still drilling in the ore body.
Yes.
That's important.
Yeah, the team on site, we have a great geological team on site. They know where they want to drill. They have great experience. Many of them have been operating there for over 10 years. They just haven't had the capital and the plans in place to do anything.
Fantastic. Okay, so we're talking about 2017. Let's come to 2018. I mean, you have invested a lot of money this year. I think you will invest a little bit again in 2018. Maybe can you comment on the targets you want to achieve? I know it's a forward-looking statement, but maybe just hypothetical, or let's put it that way. What are you planning tonnage-wise? Do you have, let's say, 10 more loaders you have to buy, or trucks? What's the situation there?
Well, to date, we've ordered all the new equipment. So it's coming in bits and pieces over the next couple of months, probably into the middle of 2018. But we really won't be spending a lot of money on new equipment in 2018. The bulk of that will be spent in 2017. So our spending rate will drop quite a bit, especially in the second half of 2018. But by then, we would expect to be steady state, at least at 2,200 tons per day. That's our published guidance of where our initial targets. We do believe we can do better, but let's get to that level first. And obviously, by bringing up the throughput levels, we will be lowering the cost structure. It is very much a fixed cost mine. So as we increase the production rates, we want to get those costs down to, call it $60 a ton, which when you look globally at other mines of our size, is right in line. And at those sort of levels, current sort of zinc prices, we would expect to be very free cash flow positive.
Fantastic. As you are, let's put it that way. If we think in zinc equivalent pounds, so zinc is today $1.50, call it, what do you think you can achieve? What would be your target in the AISC, the all-in sustaining cost?
In the short term, we're targeting to get back to 90 million pounds of zinc equivalent production in 2018 on an annualized basis, and we're targeting to get our all-in sustaining cost down to, call it the low 80 cent per pound range.
Fantastic. So I would call it a healthy margin for the future.
Now we still have to deliver.
Of course, but that's for sure.
That's our target.
You have to. Well, you've done your homework now, but you have to deliver the work you are planning to do. Of course, that's for sure. One word to Honduras. I mean, the mine is 70 years old. It's producing it's never stopped so far. And maybe can you elaborate a bit on Honduras, your relationship to the let's say trade unions, government, local community, etc.
So far, our experience in Honduras has been very positive. The mine is very important to the country and locally to the local community. It represents about 2% of GDP in 2015. Locally, there's a town of about 35,000 people surrounding the mine. We are probably the most dominant employer and provide a lot of ancillary services to the community. So again, there's a very good relationship between the two and a lot of support for the mine. We were recently able to negotiate a new collective bargaining agreement with the union when we took over the mine. That's good for 3 years. That's gone extremely well. And I think that shows in the results to date that they're really on board to help us get the mine going forward. When we need to talk to the federal government, no problems there. We can quickly get into contact with the people we need to talk to.
No, that's the important case. Super. Cliff, thank you very much.
Thank you.
Thanks for the overview. We keep not only fingers crossed, we wish you all the best for that. And hopefully we will have then soon a very nice update with higher production and lower costs.
That's the plan.
Great. Thanks
for
very
having
much.
us.
Yeah, ladies and gentlemen, it was Cliff Hale-Sanders, the Executive Vice President of Ascendant Resources. Yeah, you heard it. Very good relationships to the government, to the community, to the workers, to the trade unions. That's really important when you work in countries like Honduras, like in Latin America. But even more, they have the Mochito mine. This mine is running now since 70 years. And it looks like they have done so far a very good job. They brought up from approximately 1,200 tons. They brought it now up to, let's say, in the fourth quarter, 2,200 tons per day as an average for the production. And they will be hopefully then free cash flow now in Q4 and hopefully then really profitable in 2018. That's what we are looking for. Thanks for watching us. Bye-bye from Munich.